Now that we've looked at the global macro backdrop and we've seen the asset allocation opportunities that we can take, I'm delighted to introduce Daniel Chu from ClearBridge's infrastructure strategy. Daniel, looking at the infrastructure markets in 2025, what were the key trends and will those trends continue on into 2026?
Hi, Mike, and thanks for having me. Look, 2025 was a strong year for infrastructure. Right? And it comes down to energy transition. So we're talking about transitioning to cleaner sources of energy, renewables, natural gas. We're talking about climate change. We saw in Europe improvement in regulation because that need for investment required governments and regulators to actually increase the incentive for companies. And in the US, what we also saw was expectations of AI-driven power demand from 2024 starting to manifest itself in 2025. We've started to see CapEx increase and earnings upgrades. And so these were some of the drivers we saw in 25, and we think it'll be a driver in 2026 as well.
With long-term assets, the great macro risk is always inflation. How do you hedge yourself against that risk? And what other risks would you see from a macro point of view over the next year or two?
In our investment process, we really make sure that we look at inflation protection. When we look at our portfolio, 90% of our portfolio has those inflation protections in place. And so in terms of macro risk, could there be inflation shocks and can that impact the trading and the stock prices for infrastructure? What we take comfort in is those inflation protections make sure that the fundamentals and the valuations long-term are not impaired. And so in that backdrop, that gives us actually the confidence to be able to step in and actually own more of those companies during those periods.
Those key themes that you mentioned at the start, are they just going to keep powering on?
That's right, Mike. And that's our expectations into 2026. Continuation of AI-driven power-related investments. 2026, it's about building. It's about execution. It means more network spending to support the need for increasing power. And what we mean by that is all the poles and wires, the transmission wires that connect power sources to demand sources. And then you're also going to need a lot more investment in natural gas infrastructure. So we're talking about the pipelines that transport the commodity to its use source. It means $1 trillion of spending in the US over the next 5 years. And it's probably going to be even higher going to the next 5 years. So higher CapEx means increased earnings, and that's a great backdrop for earnings power for infrastructure. And we combine that with valuations which we think are attractive. We think it creates a great backdrop for 2026.